welcome everyone. My name is Danny. This is the Trading Success Blueprint, the Beginner's Online Trading webinar. I was concerned about the sound, so please, please use the question section to comment that the sound is okay on your end as well, and that you can see the screen. I'd appreciate it as well. Guys, please comment that the screen is visible and my voice is clear. Okay, in the meantime, I'm gonna explain what will happen in the webinar. We will, thank you, Chupin. Okay, we will begin with a quick introduction to the webinar, what will happen in every step. So initially, we will open with a quick introduction to the company, what AvaTrade is offering in our facilities, the website, the platforms, some other services that are included, which I'm gonna show you today. And on the second part, it will be more practical. We'll speak about sell and buy and essentials for beginners, intermediate, and useful things for advanced traders as well. And lastly, analysis. You guys know how it works. It's a bonus. If we will make everything we should, then it shouldn't be a problem to cover the analysis part as well. I see the people raising their hands, guys. This is a live webinar for you to also ask whatever questions you have. You don't have to raise your hand. You can just put down the question. I'll address it when I get the chance. Okay. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Guys, rest assured that this webinar will be recorded, and each and every part is something that you can review later on our channel. If you want to see another my explanation in another time, maybe you didn't get it on the first time. Also, for people, sometimes I talk a little swiftly, and then on the YouTube it's getting translated, which could also help you understand a bit better as well. Okay, so I'll make sure that the webinar is recorded as it's supposed to be. Then I'll be back. So just a few moments, then I'm all yours. Thank you very much. Okay, everything seems aligned. Ooh, we have here something already applied. Let's wipe it out and start with the clean slate. Okay, so as I said, my name is Danny. This is the Trading Success Blueprint, the Beginner's Online Trading webinar, and we officially are going to hit the road. Let's get ourselves a nice little place to write down notes. Okay. So many of you know we are a regulated company. We have 9 licenses worldwide, and we exist since 2006. Our customer service is reachable via a few ways that I'm going to show you. The first one is obviously here at the bottom left area, where you can choose to chat with us, or the WhatsApp variation, or you can just send us an email to cs@avatrade.com. Okay, anything's related to the customer service inquiries can be addressed through those channels. And beside that, you have a senior account manager that can provide you with the trading inquiries. Now, when I'm saying trading inquiries, that regards to every single thing that could be in trading, from calculation, strategy, a plan, commissions, whatever else you need, the account manager is there for you. This is why I highly recommend that as soon as you make a deposit, you do ask for assignment if you don't have your account manager calling you and introducing himself. Okay, and you can ask for assignment through here. You can ask for an account manager, or if you already have one, you can reach out. You can ask for him to reach out. Okay, now the platform that we're looking at is called the Web Trader. The Web Trader also comes in the form of an app called AvaGo. That is in the, well, that depends if you have an Apple or a Samsung, but you can find it on the store on your device. Okay, we also have the MT4, the MT5, traditional platforms, pretty straightforward. Who knows them? So that's great, but I'm not gonna show any of them currently, although we get a lot of responses that that clients wish to receive a webinar for MT4 and MT5. So please, if you get a survey for MT4 or MT5, you can choose one of them to have the webinar rather than a web trader. Okay, it could be a one-time thing. Okay, beside that, we have the Ava Social and the Ava options. Again, that's not the purpose of the webinar, but I will give just on a nutshell about Ava Social because it's very popular among beginners. We are in a beginner's webinar. So Ava Social, the idea is a social media for trading. It does much more than that. It lets you follow other traders and see their strategies. So if you're a beginner and you're in clean slate position, you have absolutely no idea what's going on here, what's going on down there. You just don't know what's happening. So of course, this could be a great solution for you. You can just follow somebody who does and has a strategy. And then, of course, eventually, if you're enjoying the performances, because the way that it works, there is to follow somebody and there is to copy somebody. When you follow someone, you get what he is doing for you to either execute or not. When you copy somebody, it happens automatically, and then you don't have to do a single thing. You're just going to enjoy his results, as long as, of course, your balance is compatible. If your status and his status is the same, and you copy you copy his strategy, that means that you're going to do it in exact. I think there is a tiny fee for that, which is mentioned on the app itself, and I highly recommend you to check it. Ava options is not something that I'm going to elaborate about, so we're just going to carry on. But I can say that in difference from other options, apps, it's much more user friendly, and it lets you do things that other apps don't. It lets you see the predictions, it lets you see what happens if, and that's pretty amazing for so many things. Okay, to construct a strategy, it's very helpful. But I just wish to carry on with the web trader presently. Okay, we're gonna keep it syndicate from the others, and we're just gonna keep on going through things. One of the actually, we're not gonna begin with that. We'll get to that in a second. Okay, first I want to show you what's on the left hand side. We added some nice features. One of them is the signals. So if I'll click on the signals, it's going to take me to the whole section filled with signals, right? All these assets are equipped with a signal that is pre-analyzed. If I'm clicking on view signal, it's going to draw down the whole the specifications for the signal. We have used some levels, support and resistance. Presently, we don't really know what is support and resistance. This is what the webinar is for. Okay, but just on a nutshell, just to understand how it's built. So if I'll take this signal as an example, let's take something else that has already started moving somewhere, because you can see each signal has production date. It has production time. It's like cake came out of the oven straight away, or it was a while ago, so it's getting cooler. And obviously, if it's getting cooler, the predictions that are here can already pass, right? It already reached certain levels. So if, for instance, we're going to look at NASDAQ, okay, we're going to extend it by clicking on the two tiny arrows upper right. You see, two tiny arrows makes it expand or minimize. Okay, now if I'm looking at the chart here, it shows this is, one more thing when you're looking at the signal, right? You see that it's specified with daily. So those levels will be presented if I'm looking at daily. Now I'm looking at the minutes, and as you can see, as far as I can go will be the max number I can see on that picture is barely 16,12332, right? Where in here, it's already showing me the 16,200 line. Why is it not showing? From the simple reason that I have explained a minute ago, that this is daily and we are looking at minutes. Now, if I'm clicking on the time frame button here and I scroll down, watch this little toggle here is something that I can either, but if I don't do that, I'm not going to see more than 2 hours, right? I'm not going to see what is underneath. So I have to either click and drag. Okay, some people don't see that. I wish it could be a little more visible, or I can just scroll with the wheel on my cursor. Okay, there is a wheel on my mouse. Then if I scroll up and down, okay, the same way that I expand the chart, that I zoom in and zoom out, right? With the wheel, I do the same thing here. So if I click on 1 day, because this is daily and I want to analyze daily, I'm going to scroll down a bit, scroll down a bit more. No, this is still not a point. This is still not a point that allows me to see. Oh, it does. Never mind. Sorry, my bad, because it was blocking my view. Okay then. So we have here some levels. Now, what are those levels? Those levels are levels that are analyzed into the signal, and they are already embedded with take profit and stop loss. How exactly does that work? Okay, just to clarify a few things. Now we're looking at NASDAQ. NASDAQ is an index, right? Now, it's just a second, guys. Sorry, there was a little disruption, but now it seems like everything is fine. So as I was explaining, the support and resistance are already levels that are predetermined through the signal, and if we get a little closer, we can also see them. So if we place, as an example, the resistance is a higher point, higher than the price, that should be an edge point on the chart, simplifying what is the potential movement of my asset. So this could be a resistance. Let's see how. Yeah, well, it's not really. Let's change it to weeks, perhaps. Okay, that makes a little more sense, but still not too much. Okay, never mind. So we're going to go along with the signal. Let's assume that those support and resistance are pretty good. I highly recommend in a very friendly manner to also make this comparison manually as well, and not to rely blindly on the signals. Why? Because as you see, some things are already, this signal was produced not a minute ago, but almost an hour ago. So it also has an effect on how efficient the signal is. You got to pay attention that the numbers adds up, because those signals are not from AvaTrade. They are from Trading Central. Okay, you make this comparison. It's super convenient. After you choose your signal, you choose NASDAQ as an example, you click View Signal, and then you can click Buy. You have two scenarios. You have buy scenario and a sell scenario. If I go with a buy scenario, just as an example, my target price is 16,165. Let me put down this one anywhere I want on the chart and click it, and then I'm going to ask it to jump to 16,165. Now I'm going to click Save, and voila, it's already here. Oh, let's change back to days. There we go. Okay, and as you can see, this is my target price. See, take profit is my target price. What is take profit? Take profit allows you to close the position automatically with the profit. Stop loss allows you, this is the stop loss, SL stop loss, allows you to stop the position from, you want to close the position and not to lose anymore. This is why it's called stop loss. You have take profit and stop loss. Now, the way that this works, as I have explained, is automatically. Those are pending orders. So in this scenario, again, super simple. We choose NASDAQ, we expand the chart, we change the date, we made sure that the support and resistance are valid. Everything is, we think that it's fine. And then we're going to hit the buy button. That means that we want the asset to go higher. How much higher though? This is how much. Okay, you see where it located by itself, the signal, the take profit. Okay, this is just by clicking here on the buy. If I do it with the sell, it's gonna go with vice versa with my take. You see the take profit is 16,165. That means we aim to go higher. And if we are selling, we're selling to 1610, which is here. Okay, it does, you see it's playing with me, so again, I'm going to place it anywhere, and I'm going to ask it to jump to 16,010, which is here. Perfect. Now, in this scenario, if this is a buy, I wanted to go higher. If this is a sell, I wanted to go lower. In this case, my take profit will be 16,165, and in here, my take profit will be 16,0110. That depending if it's a buy, you see, an arrow going up, or it's a sell. Obviously, if I took a buy and it went down, it's a loss. And if I took a sell and it goes up, that's a loss. Everything is very mirroring its contradiction. Okay. And like I said, it's automatically, you don't have to do anything. It just does it by itself. Just make sure that the analysis on it is good for you. Okay, we'll carry on. In here we have the news section. It's more fundamental. We look at the signals. The signals are technical analysis based. That means that they are relying on support and resistance. They are relying on pivot points. Those are certain levels on the chart. With the news, you get very nicely. You see everything is very accessible. It's also showing you what assets are related, and you can read the news. You can just go through the news here, see what is good for you. We have Forex, stocks, commodities, indices, and crypto. If you click here, it's going to refresh the page. And if you click here, it's going to throw you back to the platform. Underneath, you're going to see also analysis views, market budgets, similar. It's an additional, maybe additional section for news. Forex ideas, that's also technical a bit. Economic calendar is also something I highly recommend it to visit, because it can prepare you to certain waves that is possible to happen. You see how big the waves are by the impact. Okay, so if it's a major decision, it should be with high. If it's not really, it's medium, and then low is we don't expect it to make the market fluctuate too much. That depends on the significance, how big the event that is occurring. Okay, we can categorize them by the flags here. So US is marked, but if I'll click on UK, I'll have it added to the list over here. And if I exclude US, I'm going to have only the pound. Okay, that can happen with any other country down here. What else I want to show? Oh, in here you can see the education section. It's amazing tutorials academy, all for free presently. Okay, we're gonna go back to the outer shell and find ourselves a lovely asset to play with, to show Ava Protect. Okay, then we took the euro pound. And Ava Protect, the way that it works is extremely simple, guys, and can be very helpful. Okay, so Ava Protect can be only found. Perhaps I should have done it this way. Ava Protect only on WebTrader and the AvaGo. Yeah, the AvaGo and the WebTrader, you cannot find it on MT4 and MT5. Now, if I'm looking at Ava Protect, the way that it works is very simple. It lets you protect the position up to a certain time frame. Protect meaning, if you remember that I spoke about, if I take a buy, I plan it to go higher. If I take a sell, I plan it to go lower, right? Very, very simple. Just a second. Let's go for 20 pips, and in here this will be the same, a little lower perhaps. Approximately. Okay, we're gonna hit the take profit and the stop loss button and just change the figure here and change the figure down there. Okay. And now we're going to change it to 1. Okay, just as an example. So we have 25 pips away, and 25 pips away here as well. Now, the way that this works is extremely simple. We said that we're going to protect the position. Why do we need protection? Why can't we just flow with the trend, right? I think that if I'll take a buy when it's green, it will proceed going up, right? Then I'll make profits. But that's not how life works. When I take a buy, it's also possible it will go against me. If it go against me, I'm going to lose. You see what it's written here? Possible loss. How much can I lose? 25 quid. Okay? So the comparison that I'm making, Protect is going to protect my position. It's going to allow me to regain my losses. Let me put it down here. Protect lets you protect the position for a certain time frame, and whatever you lost during coverage, you will get back. There is a fee when using the service, meaning something doesn't add up, position, right? Now, the way that this works is extremely simple. I took a buy, I planned to go higher, it go against me, I make a loss. Okay, that means that if I'm planning to get to the green line and God forbid it went to the red line, I can lose potentially 25 quid. And the fee that I'm looking at, for 1 hour is $5. If I'll keep increasing, watch what happens with the fee. Gonna click on the plus, $8, $10, $11, $18, $20. Okay. Never mind. Okay, let's speak about it. Let's give it attention for a second. In this scenario, I'm gonna pay $20 to gain 25 or to lose 25. Is this worth a while? This comparison, does it make sense to you guys? Look, I'm paying $20 to get back at the best case scenario 25 or to make 25. Yeah, is it reasonable, this comparison, the fee versus the profit or the fee versus the loss? Or is it a little, let's say it's not really worth it? Watch what happens when I increase the lot size as well, right? Let's increase it to 5. Now I'm paying 100 to make 125, and the potential, no, it shouldn't be this way. Okay. But as you can see, the comparison here is to show you, okay, is to show you that you must compare the fee that you're paying with Protect with your potential profit and loss. You don't want to pay as much as you're planning to come back, to get back. You don't want to pay as much as you're planning to make, God forbid. Paying a fee, $20, making 25, I'd rather not to use Protect at all, right? What's the point? Okay, you got to make sure that it's efficient for you to take advantage of this wonderful product. Okay, we are looking at, no, I don't want to carry on with this currency presently because this is a webinar for beginners and I'd like to take something easy to comprehend. Let's go with platinum. I think we didn't look at platinum for ages. Might be a wonderful candidate. Okay, then. Okay, so let's see. We finished pretty much everything that we are asked. Okay, so the way that I picked platinum was manually, but I could just as much put platinum, pick it from the list, and there we go. Gonna click again on the 2 tiny arrows to expand this guy all the way, and then I'm starting to analyze. Remember, guys, that if I keep going to the right, I have the time frames here, which I can change as I want. In here, I have the search bar, which is witnessed, and I'm gonna keep going to the right, explaining what each function here is doing. So in here we have the candlesticks or the bars or the line. What is the difference? The difference is, guys, that the line doesn't show you certain depths that the candles are showing. I want you to see that those depths are not visible with the line. They don't even exist. Okay, but with the candles they are. Why are they important? Anybody knows why those lines are important? What they are helping us doing? I'm sorry, what those lines are. What happens when I see those lines? Anybody knows? Look, I don't blame you. It's not something that every beginner will know. This is why you're here to learn. Those are prices that the asset is went through and went back. So that means that each and every, let's take yesterday, okay? We're looking at days. Each candle here is a day. You don't believe me? Let me change the crosshair from no crosshair to crosshair. See this nice cross? What it does is it pulls the information from the candles. If I'm with a regular one, I've got nothing, right? But if I'm changing it to the crosshair, I've got everything. I have the date, I have the open, high, low, and close. Now, if I'm looking at yesterday, the 28th, okay, I see that there are certain things. Let me, oh, there we go. No, it doesn't let us see the top here, but okay, never mind. So let me also clean the table. Something we recommended. And now I'm going to put down the 4 secret ingredients: the goal, time, movements, and units. Okay, and we're going to start analyzing platinum and see what's going on. So if I keep going to the right, don't worry guys, I'm getting back to that in a minute. Yeah, I'm not going to keep you puzzled. Okay, so when we change from no crosshair to crosshair, suddenly there is information from the candles. That's wonderful. Gonna keep going to the right, gonna click on the indicators. Down here, I can just click and drag whatever indicator I want, and I can also define it, and then click save, and it's gonna be applied on the chart. Okay, then I can get rid of it, click save, and it goes away. And here I have all kind of nice things, an inventory filled with things that can assist me, perhaps mark in certain areas, mark in certain levels that I wish not to forget. Okay, you know, at this point, I don't want to confuse you with that. Okay, you see how easily I get rid of those things? Maybe this one. Oh, okay, never mind. We'll start everything from fresh, so there will be no confusion. Okay then. So I keep going to the right. We have the sell and the buy, and that's the end of the toolbar. What does the highlight lines means again? Sorry, I might have missed. No, Jen, you haven't missed the thing. This is why I said there's no need to worry. I'm just explaining it in a minute. I first wanted to wrap it up, this area here, that I can explain, I can carry on with ease. I didn't want to proceed with my explanation that I am still explaining about the toolbar. But now we are done with the toolbar and I'm getting to the lines. Yeah, so as I was explaining, the lines here are simplifying the prices that the asset has already occurred. Let me get rid of that. You see, those prices, if I analyze this candle as an example, and I'm looking at the, let me put the date on it. There you go. That's the 24th. And now we're looking at certain levels. We have open, close, high, and low. Okay, we're gonna write down each and every specification here. 922. Yeah, the close is 93. You see that it's at the bottom, but I lined it up differently, not in the same way that a platform is doing it. 942.3 and the low is 909.1. Now, as you can see, what exactly those numbers are? How can we use them? So, because this is a green candle, who knows why this is a green candle though? Why is he green? Why is this candle green? Can anybody tell me why is a candle, you know what? Why is a candle green or red? This is the basics. This is the basics, although most of the people don't understand that in the beginning, and that can be very confusing. Very confusing. Why the candle is green, guys? Because Denny, you just told us that it goes down and it went back. So look how far down it went. Still it's green. How is this possible? So I'll tell you a secret. This candle here went down initially. It went down initially, but then it ended in a higher price. You don't believe me? Okay, let's analyze it together. The date is the 24th. We're going to change it to hours. Let's see if we can pull. Yeah, I suspected. Oh, there we go. You see, initially it went down. It went down. How much down? Can we grasp it? No, we can't. That's a problem. But let's try 4 hours, perhaps. Will it let us see that? Should let us. The 24th. No. There we go. There we go, guys. We have it. You see, initially it went down, and then it went up. So this is why it's green. It went down and then it went up. So as long as the asset has closed on a higher price, it makes it green. It doesn't matter how much down it went, right? As long as it's closed, where were we? It should be, oh, sorry. There we go. Now, as long as the asset is, as long as the close price is higher than the entry, then it's green. It doesn't matter how much down it went. I wish, let me see if I can find something a little extreme to show you. Never mind. Never mind. Okay. Never mind. I'll find one. Oh, there we go. You see, this one is an example, or that one is an example. Look, you see here, you know what? I don't want to delay on that. I don't want to delay on that. Let's just carry on, and then perhaps I'll expand a little bit more while we move. Okay, let's keep this way, the numbers this way, because I have a feeling it's going to get handy. Okay, the goal here. Why must we state the goal? Why can't we just, again, I'm under the impression that this, if this is red, then I'm going to take a sell. It will go down and I'll make a profit. Is this a reasonable thinking? Let's look. Sell, let's say that I want to begin with just one, with the one unit, as small as I can. And let's suppose that I want to sell from 936 down to here. Yeah, that looks to me like a good price. Right, guys, 870, I like that number. Let's keep it this way. You think that this is a reasonable price to aim for? I'm going to place here the take profit. I'm going to put here 870 and see what will happen. Now, the stop loss, we said that this stops my position with a loss. So I should place it in somewhere that I don't want to lose anymore. That means that if it passes a certain point, I don't want to proceed with my position. And I think that a good place to put it is somewhere here, right? We said we have support and resistance, so this is a resistance, and this is a resistance. You see, multiplied. Look what a nice dragonfly candle we have here. Just thin body and such a long tail, right? See, tiny. Look, this candle is green, and look how far up it was, right? This is what I've explained, guys. It could have been green. It could have been green, but it's red from a simple reason that the close price is lower than the opening. That's the only reason. Okay, then. As I was explaining. Oh, sorry. Let me place the stop loss here, okay? And let me place the take profit down there. And you tell me, guys, is this something you would advise your friend? Is that a wise decision what I'm doing here? Or is it let's suppose that my goal, I gotta have some kind of a goal, otherwise I wouldn't even know when to close the position. Because if I took a sell and it went down, when will I close it? Nobody knows. If this is the take profit, it might never get there, right? So I'll put the goal can be $500. Okay. The time, because we're looking at weeks, let's go easy and make it weekly. Movements, what exactly the movements are? Movements, let's say 935 to 870. That's a long movement. Let's see how far down that is. 935 minus 870. How much is that, guys? Anybody knows? $65 in a week. Okay. Is that realistic? Guys, I've got a very basic question for you. Is that realistic to happen in a week? Let me clarify this and paint it in green. Okay, just to understand that this is the profit area. Okay, we have a positive vote from Jen. Very good. Who else thinks that this is reasonable? Josh also. Oh, Papa, I don't think so. Okay, we have one vote for no. We have 2 for yes and 1 for no. We can get another yes. Perhaps we can overcome the debate. Anybody else? Otherwise, I'm Landani. Oh, we have another no. We have another no. So, okay, we must understand something here might not be in order. Okay, let's use an indicator to know the range of how much platinum can move in a week, shall we? Let's click on indicators. Let's just place AVE for average true range. Gonna click and drag it to the right. At this stage, I'm gonna keep it as it is. I don't want to play with it too much. Okay, just wielders, 14 and 1 packs. Click save, and the range, ladies and gentlemen, is 52 per week. 52 per week, and our estimation, the estimation was 65. The estimation was 65. Is it in the range or out of the range? What do you think, guys? What do you think? Is it in the range? Out of the range. Correct one. Jen, also out of the range. Papa, very well, out of the range. So if it's out of the range, what do you think that would be a more reasonable movement, right? What is a reasonable price? Let me, you know what? Let me push it up a little to 890. Okay, does this make sense? Or even 85. Okay, do you think that this is realistic? Let's see the difference. Yeah, $50. Do you think that $50 is a good number to aim for? Is it in the range or not? Is it in the range? Yes. Okay. So should I go with that? You think $50 is good? Okay. So how many units do I need with $50 if each and every ounce, because this is platinum, so it's measured with ounces. If let me place it first. This is a sell 885. We said $50. I'm selling just 1 unit. Then I get 50. Perfect. And I want to know how many I need to sell to get the 500, right? If selling 1 multiply 50 gets me 50, right? How many do I need to sell to make 500? Oh, sorry, $500. Yeah, perfect. Perfect. Well, that was brief. More people to comment, please. This is a great audience, guys. You caught it in a minute. Very good. Very good. Papa, very good. So everybody wrote the right answer. I guess that was a very, very easy exercise. 10. Let's examine our findings. Let's change it to 10. And yeah, there you go. I have to know that if I'll be precise on that, that's going to show me the number. And let's practice and put it $50 away just for the sake of the discussion, because we know that it's in the range and we want to play with it a little. Okay, so the potential loss is vice versa. We're going to have it at 885. This is regardless analysis, guys. This is just doing the preparations, right? 987. That's somewhere here. How convenient. That's sitting on the resistance. Okay then. So let's, by the way, I almost forgot. Is there anything here that isn't clear? Is there anything that anybody wants to ask anything? Maybe some parts I've done a little too swiftly. Is PAM the same as PIP? PAM is, just a second. Okay, there is a question here. Thank you, Jen. That's a wonderful question. Guys, what is the difference between potential average movement, again, potential average movement, to the average true range? What is the difference? By the way, PIP is percentage in point. Meaning that's the 4th digits after the decimal. Yeah, it's not dollars. Dollars are dollars. Okay, when you have an asset that moves $1, you get $1. If it moves a pip, it's gonna only move the 4th digits after the decimal. So if it moves a pip, it's much less than $1. Okay. Yeah. So what is the difference? This is what the platform is giving me. The average true range is something I've got zero control about. I'm not having any jurisdiction with it. It just as it is. You see, it's in the platform. It's measured by taking the figures from the past 14 candles, just accumulating an average, and there you go. The potential is with wisdom. The potential needs to be, you remember that I kept asking, is it in the range? Is it out of the range? Is it in the range? Is it out? Why do we do that? Because there is no obligation on my side to take this whole thing. This is just an indication for me. I can decide I can go with $10 away or $20 away or $30 away. But if I go beyond the average, yeah, if I go for 65, you know what, let me exaggerate. If I go with 100 and I know that the average is 52, might get there. It's not impossible. I gotta tell you, from a person who's seen things, nothing is impossible, but we oftenly aim for what is realistic. Okay, not the dream scenario, but the down-to-earth scenario. So the PAM is with wisdom, is to know, okay, the average is this, but I'm gonna maybe go for lower than that. Okay, because I want to be cautious, or you want to call it, you can call it whatever you want. Does this make sense? Does you guys understood the difference? Thank you, Jen, for bringing that up. I usually don't even explain about that, but it's good. Yeah, well, I'm happy that it helped. I'm happy that it helped. Okay, so let's carry on. So we saw 50, 10, everything makes sense. The take profit here, and loss here, everything is exactly as we wanted. Stop loss. Okay, now when I'm looking at the numbers, I'm more relieved. Okay, now what do you think? Let's think about this reasonably for a second. So we can make 500 and we can lose 500. Okay, my balance is $10,000. Okay, it's a demo account. You see here that it's written. Now, potential loss, we said 500 out of 10,000. That's 5% exposure, right? Is 5% exposure is something that is acceptable or not? What do you think? Is 5% is okay, or it's large? Okay, so Paul here don't seem to like it. Anybody else? Or you think that it's fine? Maybe 5% is fine. I'm still gonna have 9,500 left, right? George, I wouldn't go for it. Jen, mine is 2%. Okay. All right. Well, it seems like you guys don't like it. So 5% is 1% is good for starter. Yeah, absolutely. Papa on 10%, 10,000. It's acceptable. Okay, then. So how do we adjust the 5% to 2.5? Sayed, what is exposure? That's a wonderful question. Thank you. Let's understand what is exposure, and then we'll answer that question. But how can I adjust the 5% to 2.5%? Right? Let me just give you a riddle in the meantime that I'm explaining to Sayed. What is exposure? Okay. Exposure, how much I can lose out of my balance. Meaning 10,000 minus 500 equals 9. Okay, that's the exposure. For instance, if I had, let's say, no, I don't want to go too far. Let's say 200,000. Okay, minus 500 equals 1,000. Sorry. Okay. Which means that's way less than 1%. Let me put it this way. Anyway, the exposure is out of the balance that you have. You compare the amount that you can lose, and you have the percentage. In here, it's approximately this way. Okay, and here, 5%. So how do we make the 5% 2.5? I hope you understood the comparison. In here, the loss stays the same, but what I changed is the balance. You know what? Let me make something maybe a little simpler. Oh, sorry. There you go. Okay. Yeah. So how do we make it 2.5 out of the 5? How do we make it 2.5 out of the 5, guys? What must happen for me to remember? We had two intervals up here determining the profit or loss. We have the movements and we have the units. One of them has to come down for me to lose less, right? What needs to happen for me to lose 2.5%? You know what? Let me simplify it a little bit more. How can I lose 250 instead of 500? right? Lower the goal amount. Okay, move your stop loss. Okay, let's try to move the stop loss, okay? If I move the stop loss from 987 down here, let's see how much I can lose. 967. Okay, let's move it down a little bit more to 62. I'm just gonna get rid of this guy for the time being. Nice. Who wrote this? Oh, Paul. Paul, you provided me with a great solution. I just dragged down the stop loss a little bit, right? What else I could do if I don't want to give up my analysis? I want to keep my analysis as it is. What other solution I have? And I don't have many. What other solution I have? Okay, so one, get the stop loss closer. Excellent. Let's mark V. Thumbs up. What's the other one? There must be another one. I mean, if I don't want to give up my analysis, there must be another solution for that. Lower the lot value. Well, you guys rock. Very nice, very nice. Let's make it 5 then, see what happens. There you go. Thank you, Jen. So with this method, we're able to maneuver quite comfortably with just how much we can lose, right? Yeah, it's as simple as it can get. The only thing I gotta make sure though is that I have enough money to acquire this position because it looks pretty pricey, right? Let's see, the value is movements. Oh, sorry. The value is the price per unit multiply units. Means 935 multiply, how many was it? 5 equals 4,006. So how did you calculate it so fast? Well, it's here in the value. Yeah, just a second. Yeah, so as I was showing, the figure is already written in the value, and as you can see, this value is presented on the web trader to the right hand side comfortably, but you can also do this calculate manually, okay, by multiplying the price per unit by the amount of units I have. If it would have been 10, the value would have been 9,300. Okay, now that also means there is something here called leverage. You see, this leverage, what it does is it multiplies buying and selling power. The way that this works is I have a certain figure that I multiplied with that allows me to maneuver with more units with the same balance. It just multiply my ability. So that means that my 10,000 will behave as if, let's see how quick you are, guys. As if I had how much? 100,000, exactly. Thank you, Dave. So that means that my leverage allowing me to acquire more units. Can it have any negative effect? Is it possible for me to get, can my account be affected negatively by leverage? Anybody knows? Let's suppose I didn't have the leverage in this case. Could I acquire this position in the first place? Let me simplify it a bit more, okay? 1 to 10, okay? That means that my margin impact or margin requirement, okay, that means 4,680 divided by 10 is how much? 486, okay? Now, how does this work? If I wouldn't have the leverage and I still had 10,000, I'm sorry to bring the news to you guys. Without the leverage, I wouldn't be able to take this position in the first place. With 10,000, I would. With 10,000, I would, even without leverage. But without leverage, could I acquire this position? You know what? Let me increase it a bit. Okay. This one I can take. I can. What about without leverage? Without leverage, could I do it or not? Look at the value here. Without leverage, could I acquire this position? No. Okay. But with leverage, how much do I need? There you go. So that means that the leverage doesn't necessarily make you lose more or gain more. It allows you to acquire more, to acquire more units, right? That's what it does. That's how you leverage your trading. Okay, CFDs, contract for difference, are leverage trading. Okay, you can read about it more, as I said, and you can of course review the videos here to understand a bit better how it works. But regarding our webinar, unfortunately, guys, today our time is up. I would like to thank all of the nice people who helped me from the audience to explain things in certain parts in the webinar. Okay, I hope that you enjoyed. And for the person who reminded me about the PEM, I really appreciate it. You guys have a good week. I wish you to make a lot of profits, and you can join us tomorrow to the live Q&A. Of course, with a pleasure. You have a good day, guys.